Right now, whenever Trump says something, crypto prices go wild. Changpeng Zhao has officially been pardoned, and Binance and related coins are surging. They're about to issue new tokens. Some people are predicting that in December, Bitcoin will start at no less than $200,000. So where does this confidence come from? In October, you could say the crypto world was turned into an EKG by Trump. On October 10th, Trump said he would impose a 100% tariff on China, and Bitcoin immediately crashed, dropping from 114,000 straight down to 104,800. NUP2 also fell below 0.5, and panic selling swept the market. But 3 days later, he suddenly softened his stance, and the price of Bitcoin bounced back to 110,000. Then, on the 11th, the US introduced another set of export restrictions, and Bitcoin was pushed down again. It wasn't until October 24th, when the White House released news that the two countries would meet, that the market finally stopped falling. Bitcoin stabilized around $113,000, and NUP rebounded to 0.52. Market sentiment shifted from near panic to let's wait and see, but the most dramatic part was still ahead. Yesterday, after China and US representatives finished talks in Kuala Lumpur, US Treasury Secretary Bessent said the talks went well and tariffs might not be imposed. This statement was more effective than any indicator. Bitcoin turned green, and panic selling flipped to optimism in seconds. It's true, a single word from Trump can stir up a storm in crypto. If he talks about fighting, the market drops. If he mentions negotiations, prices soar. In the future, I think there should be a Trump face-changing index. Maybe it would be even more accurate than technical analysis. Today, Binance founder Zhao Changpeng made another bold statement. In a financial interview, he said that stablecoins can not only facilitate cross-border payments, but also revitalize the entire economic chain. First of all, the US government really loves it, right? Because most US dollar stablecoins are backed by purchases of US Treasury bonds and US dollars. This move can be described as the private sector footing the bill and the government getting the financing. Second, the hype in the crypto world has in turn boosted demand for energy, computing power, and chips. These upstream and downstream industry chains are basically like the crypto world's version of Nvidia taking off. Third, the development of stablecoins has also become a lubricant for on-chain finance, attracting a large inflow of capital from countries outside of those with the local currency. At the same time, Bitcoin's on-chain data is also looking very strong. The proportion of profitable supply has already risen to 83.6%, which is quite a bit higher than last April's 73% and September's 76%. What does this indicate? It shows that market confidence is recovering. Generally speaking, this figure falls between 85 and 90. That's considered a healthy expansion range. If it exceeds 95, we need to be cautious about a bubble. In other words, the current market is still steadily climbing, and there's still a lot of room before it enters the overheated zone. However, if the price rises too quickly, a correction triggered by profit-taking could happen at any time. Alright, let's take a look at what's happening on-chain. Honestly, it's even more dramatic than a TV series. Starting in mid-October, 62,000 dormant Bitcoins suddenly woke up. The market value was $7 billion US. So what happened? Contrary to expectations, retail investors panicked as if it were the end of the world and rushed to sell, but recently they've turned around and steadily bought back in. There was a comment I found very vivid. He said momentum players pulled out, bottom fishers didn't fully step in, and the market experienced a short blackout. So, looking at the data, small wallets are dumping like crazy, while the big players are as steady as monks in deep meditation. Right now, 82% of Bitcoin holders are still in profit, but the overall enthusiasm has clearly dropped. The on-chain data is plain for everyone to see. In the chart, the pink line represents the whales, and you can see it's been rising all the way, while the blue line, which represents retail investors, has been dropping continuously. And what about the price? It hasn't been dumped and remains steady. So who's holding it up? Of course, it's the ETF institutions and sovereign wealth funds, these big capital players. In the past, the price of Bitcoin relied on faith, but now it's supported by real money. So this bull market isn't just being hyped up by talk, it's being driven by real money. Now even celebrities are getting involved. Singer JJ Lin posted a photo with Ethereum's co-founder, and his caption read very much like a heartfelt declaration. The two of them talked about how technology can encourage people to live more sustainable and meaningful lives. So, the stage is set. Crypto is no longer just a game for the financial world. It has entered the cultural sphere. Retail investors are exiting, the big players are boarding, and even singers are starting to talk about Web 3. This game is really getting bigger and bigger. Alright, please like and turn on the notification bell. I'll help you sort out the latest updates from the crypto, blockchain, and mining worlds over the past 24 hours. Welcome to become a member. From Monday to Friday, we prepare a wealth code for our basic members, where to buy, where to sell, so you can experience the fun of trading. All right, let's look at the news. Do you all remember last year, before Trump was elected president of the United States, that heated election? Everyone was arguing endlessly about whether to choose Joe Biden or Trump, while everyone was busy rallying votes. A 27-year-old named Shane Copeland founded an on-chain betting website. Now that Trump has won, as everyone knows, after Trump's victory, the company's valuation skyrocketed, and he made a fortune, landing himself directly on Bloomberg's list of the wealthy. Now here comes the most explosive part. This guy isn't just opening an on-chain casino. He's about to start issuing his own chips. He's preparing to launch a token called Poly. You have to admit, this guy is smart. While others are betting on candidates, he's betting on the future. While others are just watching the show, he's already making waves.
In a blog post on Dagon 6, Matthew Maudable confirmed that the Poly token and its airdrop plan are about to launch, and the airdrop may be distributed based on users' historical trading volume. But he emphasized that the current focus of Polymarket is to re-enter the US market, and the token issuance will not happen immediately.
Arguably, it's one of the most mainstream crypto projects out there, and we just want to make sure that when we do shift our focus to a token, it's one of our core priorities, right? But right now, our main priority is launching in the US.
After reaching a peak trading volume of $2.5 billion in November 2024, the platform rapidly expanded. In May, monthly trading volume was about $1.1 billion. In June, it raised $200 million, reaching a $1 billion valuation. Now, Polymarket's valuation is nearly 10 times higher than in June.
You can see that the US has completely opened up its attitude toward crypto. In 2022, Polymarket was once forced to pause by regulators, but now it has transformed into a rising star. What's more, it has received a $2 billion investment from its parent at the New York Stock Exchange, the Intercontinental Exchange. So now its valuation has reached $150 billion. Where does its opportunity lie? As everyone knows, the thing Asia does best is following trends and launching new platforms. So, when will a Chinese version of Polymarket come out? I've already seen at least 3 or 4 prediction market versions in the market, but they're still some distance away from Polymarket's scale. So this is also an opportunity for the Chinese-speaking community. When will there be a Chinese version of Polymarket that allows everyone to fairly place on-chain bets on all phenomena in the Chinese-speaking world? I believe this will be where future market opportunities lie. Last night, President Trump officially pardoned all the crimes of Binance founder Changpeng Zhao, which instantly set off an explosion in the entire crypto market. The first to surge was BNB, which then ignited the private token BNB Treasury and listed companies. Even the Trump family's Wi-Fi project turned bullish as a result. When Trump signed the order, he even said, "Although I don't know CZ, I believe he is innocent and was only persecuted by the Biden administration." So this news really hit the crypto community hard. CZ later posted a message expressing his gratitude, saying that this move would make the US a global leader in crypto regulation. Therefore, this pardon is not just a political stunt, but more like a shot of confidence for the market, signifying that being crypto-friendly is no longer just a slogan, but has become actual policy.
The strongest reaction came from BNB, which surged from $1,076 to a high of $1,161, an increase of nearly 8%. Its 24-hour gain remained around 15%. Even the most supported asset, Ether, once spiked to $1.48 before dropping back to $1.12, still up about 10%. The meme coin sector also went wild. Binance Life rose from 23 cents to 28 cents. REN token jumped from 7 cents to 15 cents, and even after pulling back to 12 cents, it was still up 34%. Meanwhile, China Renaissance Holdings, 1911.HK, saw a slight uptick. The market jokingly called this rally a Fanjin passing the imperial exam style celebration.
Actually, I don't think there's really anything worth celebrating on a grand scale about this. Just like when CZ was sentenced, I didn't feel like it was a real crime, as if he had actually done something evil. It's more like the centralized world imposing arbitrary charges on the decentralized world. I see it as a badge of honor for every Web3 warrior, so when the so-called pardon from Web2 comes, there's really no need for us to get overly excited. We can just say, "I don't care," and move on. Back then, CZ resigned as Binance's chief executive officer in order to plead guilty, but who doesn't still see him as Binance's chief executive officer? That said, this round of pardons has indeed caused a lot of tokens to surge, right? From BNB to asset tokens and even to US stock sectors, even privately issued coins like the Trump pardoned CZ token have started to appear. To put it bluntly, the crypto market is still just a game, an information game where whoever reacts fastest makes money first. Retail investors, don't just rush in as soon as you see the news. The smart thing to do is to let AI help you map out these ripples and see which ring is actually the entry point, because the first wave is for making money and the last wave is just left holding the bag. The crypto community keeps talking about decentralization, but when Amazon Web Services goes down, all the major public blockchains get stuck at the login screen. Bitcoin dropped from 126,000 back down to 104,000. Retail investors are panicking, while institutions are buying in. This round of the bull market is being bought with real money. And once again, Amazon's cloud service AWS crashed. This time, the crypto community is both frustrated and amused. We keep shouting about decentralization, but in the end, we still have to rely on Amazon servers to keep things running. Looking back at the records, from 2021 to 2025, Coinbase outages, DYDX lagging, Binance order failures turning into PowerPoint slides, all of these were caused by issues with cloud services. The most ridiculous part is that the entire foundation of decentralized finance is like this. The entire infrastructure is built on the cloud services of these three centralized giants, Amazon, Microsoft, and Google. Ideally, everything is supposed to soar on-chain, but in reality, we're still held back by the cloud. To put it bluntly, the soul of decentralization cries out for freedom, but when you look back at its Achilles heel, they're all plugged into the internet cables.
Now, this outage first hit early this morning, knocking dozens of companies offline, from government websites to crypto platforms and AI tools like Perplexity. AWS powers roughly a third of the cloud market, and the issue stemmed from a failure in its Northern Virginia data center, disrupting more than 70 services.
The root cause was a DNS resolution error in DynamoDB in AWS's US East and Virginia region, lasting about 15 hours. The chain reaction spread rapidly, freezing Coinbase and the base network. Robinhood experienced delays and lag, while MetaMask and Infura had anomalies that caused balances to display as zero. Even more serious, 6 Layer 2 networks including Polygon and Optimism went offline simultaneously. About 37% of Ethereum execution nodes failed because they were hosted on AWS. Ordinary users were locked out of the blockchain.
All I want to say is, this time, Amazon's cloud service really crashed spectacularly. And honestly, the crypto world needed a wake-up call like this. Coinbase once said they wanted to build a hybrid cloud, and Infura said they wanted to cut Amazon's share to below 20%. So it took a boom like this to realize that centralization isn't just something you talk about. Are there solutions? Yes, there are regionally decentralized cloud platforms like Filecoin and Akash. Although they're stable, their prices are indeed much higher than Amazon's and very few people use them. But this time, the industry really learned a lesson. Don't all crowd under the same tree for shade. If you really want decentralization, you have to spread out all the cloud services. Otherwise, if Amazon goes down, the whole chain goes down with it. So, who didn't have any issues this time? Bitcoin, Dogecoin, these true POW coins didn't have a single problem. They're rock solid. Everyone did the math. No, in October, Bitcoin's increase was only 1%. At the beginning of October, it had just touched 126,000. But with one comment from Trump about raising tariffs, it was slammed down to 104,000, a drop of a full 18%. So, BBIV's volatility soared to 41%, and everyone in the crypto world was begging, please, go easy on us. Just when everyone was doubting their life choices, Tiger Research jumped out and declared that Bitcoin would hit $200,000 in the fourth quarter. So where does such a bold prediction get its confidence from?
Even though retail investors are panicking, institutions remain steady, even using the dip to boost positions. In Q3, net inflows into Bitcoin spot ETFs were $7.8 billion. Though lower than Q2's $12.4 billion, capital keeps flowing in. The first week of October was notable, with $3.2 billion in a single week, setting a new high for 2025.
Usually it's the same story. A bunch of people got bullish and thought that when we ran up to, 116, 117 over the weekend, it was just going to keep running right through 125 and maybe even hit new all-time highs. But obviously, the shorts had the numbers on their side and wiped out some of that leverage. It's really not a big deal, just a short-term thing.
Data shows that the market is slightly overheated, but the risks are controllable. The MVRV-Z score is at 2.31, which is high but stabilizing. Both NUPL and ISOPAR are at 1.03, close to equilibrium. However, network growth is slowing, the number of transactions and active users are flat, inflows to centralized exchanges are increasing. So in the short term, we still need to be cautious about profit taking.
So, on October 11th, when the price dropped sharply by 14%, retail investors panicked, thinking the rally was over and a bear market was starting. But actually, once the leveraged positions were liquidated, everyone realized that it was still the institutions picking up the slack. When you sell, I buy, this wasn't a crash at all, but rather a reshuffling of the deck. In fact, the macro environment is also supporting the overall market rally. Do you know that the total M2 is 96 trillion US dollars? So the Fed cutting interest rates should be just getting started. After Trump takes office, it's likely he'll replace the Fed chair with someone extremely dovish, which will lead to an overall expansion of liquidity. So hot money will flow into the crypto space, and it'll get so hot it's almost untouchable. These days, with all the confusion around inflation, tariffs, and geopolitics, no matter where Bitcoin goes, everyone's just watching the chaos unfold. Only Bitcoin is a truly decent safe haven. In my view, $200,000 is just the beginning. $250,000 is also possible. Everyone just watch how fast it goes.
Zhao Changpeng himself has personally confirmed that Trump signed the pardon order by hand. The crypto community is in an uproar. Next, CZ will focus on running his family office, and WizLab's investments have even led to invitations from multiple countries for him to serve. Crypto advisor Ant Group has also started getting on the blockchain. According to reports from Hong Kong media, they've registered quite a few trademarks related to virtual assets and stablecoins in Hong Kong. Even the names have been arranged. It looks like they're planning to move from the QR code era into this new space. They're making a push into the crypto world. The US and Thailand are really showing two different approaches this time. One is holding steady, the other is flooding the market. The US isn't cutting taxes, still the same 19%, but Thailand, on the other hand, made a bold move and slashed 99% of tariffs in one go. This move looks like a win-win situation. One side collects money, the other makes friends. Japanese startups have finally launched their own yen-based stablecoin. Today, GPVC officially announced the launch of the world's first yen stablecoin, and they're making a bold statement about it. Each coin is backed by savings and government bonds, so this currency isn't just stable, it even carries a hint of central bank endorsement. The Tether CEO is at it again on X, making more sales pitches. Now, all those centralized AI companies are acting as AI treasuries. But between the lines, he's saying that AI won't stay locked up in a walled garden forever. One day, it'll break out and truly flow freely.
Some people always say, when I get old, I'll really enjoy life. But they forget that the most precious thing isn't the time in the future, but every second and every moment right now. The delicious food you crave when you're young won't taste the same when you're old, and your teeth aren't as good. You might not even be able to digest it. The roads you want to travel when you're young won't bring you joy if you wait until you're old and your legs aren't as strong. So, happiness isn't some pie in the sky for the future. It's about whether you have something sweet in your hand right now and whether it tastes good. Enjoy it now. So stop thinking of enjoying life as being lazy, and don't see taking it easy as something shameful. You work hard at life not to make up for it when you're old, but so you can enjoy it right now. That way, you can have a steady sense of happiness. After all, life doesn't wait for anyone. It's only about seizing the moment. If you understood this, feel free to give us a like. That's all for today's program. Every day, we help you sort through all the news in the Web3 world. We hope that this news curation can give you a rational understanding as you enter Web3, and in turn support you in making the right decisions. Here, we've also organized some member benefits, and we hope you'll take a look. Thursdays are for members-only live streams, and this morning at 8 o'clock, we had a members-only weekly review. Is there still a market opportunity in the coming week? Where is the safest place to buy in? The weekly review will give you advice on all of this. We hope to lead everyone in riding this bull market together, gradually becoming wealthier. See you next year.